Hello everybody, welcome to Kev Thinking Out Loud. Today I'd like to talk to you about RSP accounts deadlines and tax-free savings accounts and deadlines. The RSP deadline for tax year 2011 is going to be February 29th, 2012. This is because it's a leap year, so please, if you do RSP contributing and tend to wait till the deadline, it's February 29th, not March 1st. In order to get the tax receipt for 2011. Tax-free savings accounts, January 1 of every year. Canadians are allowed to put $5,000 in a tax-free savings account, an additional $5,000 in room, I should say. Now this January 1st, that means that the cumulative amount that we're allowed to put in as individuals goes from $15,000 to $20,000. So in a household situation with two members, that household could have obviously 2 times $20,000 or $40,000 in a tax-free savings account, so that last $5,000 is able to go in January 1. Now both account types, the RSP and the tax-free savings accounts, in my view, are both important for accumulating wealth for retirement or financial security. They are different in the way the tax treatment is. However, they're both important to different degrees, I accept, depending on the household situation and other factors, but one normally should not be done at the exclusion of another. RSPs are still important, even for those contributing to tax-free savings accounts, for most people, because of the large tax benefit that gets received by the taxpayer up front. The tax deductibility of the contribution is a very efficient way to save larger amounts of money. That does not happen with the tax-free savings account. I have seen situations where some people decided or were tempted to, instead of doing RSPs, only do tax-free savings accounts, and in my view that was often a mistake. The tax-free savings account, on the other hand, like the RSP, has tax deferral on the growth, but in the case of the tax-free savings account, it's a permanent tax deferral, which makes it very efficient and effective for accumulating wealth over the long run. When that money eventually gets spent or inherited by the next generation, there'll be no tax on that money. It's just that it's harder to accumulate it because there's no upfront tax savings. Now, we've seen recently, continuing to see, I should say, in my view, a missed opportunity in the tax-free savings account, even for those that are using it. The majority of Canadians continue to put their tax-free savings account money into very low interest rate savings accounts. In my view, that's a complete waste of an opportunity to get meaningful tax deferral over a long period of time. And the reason I say that is, the cost of this mistake gets higher and higher as the limits go up every year. Imagine a couple scenario like I suggested, with two people with $20,000 allowed to be in tax-free savings accounts. If they choose to have that combined amount, $40,000, in a 1 or 2% interest rate deposit account, then they're basically receiving the tax savings on the growth on 1%, which is a minuscule amount of tax savings, and it's virtually, in my view, impossible to accumulate real wealth if you're resigning yourself to a 1 or 2% rate of return. The real power of the tax-free savings account is if it's invested similarly to the RSP account, which is a long-term growth-oriented vehicle. If you instead pursue a balanced portfolio or a growth portfolio on that, trying to achieve rates of return, who knows, between 6 and 9% over a long period of time, now you're talking about some real meaningful financial planning, wealth accumulation, and tax deferral. So I'll continue to bring this issue up as I see more and more people continuing to make that mistake. And as I said, if you imagine a couple years down the road and now the household limit is $60,000, $30,000 per taxpayer, if that money's in a 1% interest rate or 2% interest rate, that's just an incredible waste of an opportunity. So please keep that in mind when you're thinking about tax-free savings accounts and RSPs. If you want to know the right balance between the two types of tax treatments on the account in your situation or your family situation, please give us a call or send us an email. We'll be talking about it ongoing throughout all of 2012, and I expect every year to come. Thanks a lot. Christmas is coming up. I hope everybody has a great holiday season. I'm looking forward to seeing everybody in 2012. Thank you.